start with AS10. In AS10, for examination usually or even in the chapter, three concepts are very, very important, sir. What are those three concepts, sir? One is initial recognition. Hello, what is that? Initial recognition. The other one is subsequent recognition. And another important one is depreciation. So these three are the most important topics, sir. There are some miscellaneous points also. Based on the time, we will discuss the miscellaneous points also. But usually I can say most of the important points are from these three topics only, sir. Initial recognition, subsequent recognition and depreciation. Suppose in AS10, 15 questions are there. Out of 15, 10 to 12 questions will be from these three topics only. Only 2 or 3 questions will be from other aspects. So thereby, let me cover these three important aspects. Are you all ready? Okay. In that first, let us start with initial recognition. What is that? Initial recognition. Initial recognition in the sense it is at the time of purchase, sir. Hello, it is the type of purchase or manufacturing. Let me divide this for two types, sir. One is an asset acquired and if the asset is self-generated. Sir, we can divide into two types. When the asset is acquired, when the asset is self-generated. Similarly, acquired also I would like to divide into two. One is acquired for cash or credit. The other one is acquired by way of exchange of assets. Initial recognition, I am dividing into two. One is acquired, the other one is self-generated. Even in acquired, we'll divide into two. One is cash or credit, the other one is by way of exchange of assets. Now, first let us deal with cash or credit. Then we'll proceed to exchange of assets. Then at last to self-generated assets. First, cash or credit. If you have purchased an asset on cash basis or credit basis, now what is the cost of such asset? What is the cost of that PPE? Now usually cost of PPE is divided into three types. How many types, sir? Three types. One is purchase price. The other one is directly attributable costs. The other one is decommissioning, restoration and other similar liabilities. Decommissioning, restoration and other similar liabilities. So three aspects will be there. Cost of the PPE usually consists of three aspects. One is purchase price, the other one is directly attributable costs, and the last one is decommissioning, restoration and other similar liabilities. I'll give you clarity, don't worry. First, what do you mean by purchase price here, sir? It is very simple. The basic price you pay for the asset. Basic price plus non-refundable duties and taxes. Non-refundable duties and taxes minus trade discount. So these together gives you purchase price, sir. These are the components of purchase price. First we'll write basic price. For that we'll add non-refundable duties and taxes. For that we'll reduce trade discounts. Now, sir, what do you mean by non-refundable duties and taxes? Sir, usually when we pay some taxes, it will be refunded to us. If it is refunded, is it really a cost to us? No. So that's why only non-refundable duties and taxes will be added. If it is refundable, it is not part of the cost of PPE. Examples may be usually, if we take GST, hello, what is that? If it is GST, you will be having input tax credit. Hello, what is that? Input tax credit. So if ITC is there, we will call it as what, sir? Refundable. But don't think that only GST is the tax we are having. Though Modi ji says one nation, one tax as GST, but still there are many other taxes. Maybe in introduction to GST you might have heard, there are many taxes which are not subsumed within GST, like some local taxes, maybe customs duty. So there are some taxes which are not subsumed within GST. So still some taxes are there. So what we say is, if it is refundable, don't consider. If it is non-refundable, consider as the part of the cost. So hope it is clear. Next, directly attributable costs. So what do you mean by directly attributable costs? Very simple. Those costs which are required to make the asset ready for use. Those costs which are required to make the asset ready for use, that costs are said to be directly attributable costs. Usually, what costs will incur for getting the asset ready for use? Let us say this is the company, sir, we are there in, and here is the supplier. A godown is there for supplier. Now we need to purchase a particular plant and machinery. Now what are all the costs that we incur for getting the asset ready for use? First, for bringing this out, we have to pay something, sir, which I would like to say purchase price. Because I have to pay basic price, I have to pay any taxes, reducing trade discounts. This is purchase price. If I just pay that amount, I can start using the asset. No. So I have to incur various other costs, just like what, sir? I have to bring it to my godown. Am I right or not? So freight charges will be there. What will be there, sir? Freight charges. Now, sometimes you might bring big plant and machineries, sir. When you bring big plant and machineries, first of all, that site has to be made ready for installation. Hello, what is that? Site has to be made ready, which we call as cost of site preparation or site restoration costs. Hello, it is called as cost of site preparation. Unless we make it ready, we cannot install plant and machinery. So site preparation costs also are required. Later on, okay, sir, site is prepared, set is also brought, immediately we can use no. Installation is required. Hello, what is required? Installation is required. So any installation charges are also required, sir. Okay. Now, installation completed. Immediately can be used, sir? No. Sir, we have to check whether it is running properly or not. Hello, we have to check whether it is running properly or not. For that, what we will do, sir? We will do trial run. Hello, what we will do? Trial run. I think in costing you will get all these aspects, sir. We will do what, sir? Trial run. That means we will check whether the asset is running properly or not. Now, do you think we know the functioning of the asset? Can we really check whether the asset is functioning properly or not? No. Usually we call for some engineers. Hello, they will come and check whether this is working properly or not. Engineer, what he will do, sir? He will just say how to operate it. Will he just bring the materials? Will he just do all the work required? No. So once again, some material are required, some laborers are required. Now all these costs together we will call as cost of trial run. Either it may be amount paid to engineers or material costs or labor. All these are required, which we call as cost of trial run. Okay, sir. Let us say using trial run, some products are manufactured. Now what we will do with that products? Trial run only. So damage it. Will we damage it, sir? No. Will we destroy it? No. So we will sell it in the market. So from this, if we get any sale value, so we have to reduce. That is the net cost for us. So less sale value of any product manufactured in this process. Any product manufactured in this process. So hope you are getting, sir. These are all considered as what, sir? Directly attributable costs. What are the costs, sir? Sir, I could have given the list, sir. But if you learn like this, what is happening in process, you will never forget those costs, sir. First, freight charges will be there. Site preparation is required. Then installation is required. Then trial run is required. Trial run in the sense all those we pay for engineer, materials and laborers. Now then we'll reduce the sale value of any products. Now these together are called as what, sir? Directly attributable costs. First, purchase basic price, non-refundable duties, trade discounts. These are all purchase price. Here we can say, now I am writing it quickly, it is freight charges, then site preparation costs, then installation charges, cost of trial run, net of sale value of the products. So these are the directly attributable costs, net of sale value of products manufactured. So these are the directly attributable costs. Hope everybody have understood what are directly attributable costs. Next, decommissioning, restoration and other similar liabilities. What is this, sir? In AS10, a new concept was brought, sir, where we feel that if an asset has to be removed at the end of its life, tell me, we are removing some asset at the end of its life, sir. For removal also costs will be there. Am I right or not? Now, where we shall charge? Actually, this is clearly related to the asset. But can we add it to the asset? At that time we remove that? Not possible, because asset is not having any more FEB. Because life of the asset is completed. That is clearly related to the asset only, but still we cannot add to the asset because life is over, no more FEB. That's why a new concept was brought in AS10 where they say that if you feel some amount will be incurred at the end of the life for removal, at the time of purchase only recognize it. At the time of purchase only how do I know today, sir? Estimate. Make a estimation. Whenever there is a change, you change the estimation. Now, sir, I will incur after 10 years. No. Today only you are asking me to recognize. Okay, recognize only at present value. Hello, are you getting the point, sir? Decommissioning. Commissioning means installation, sir. Decommissioning means removing. At the time of removing, if we incur any cost, that we will call this, sir. We'll simply call this as present value of cost of removal or restoration, etc. At that time, whatever costs we incur at the end of the life, that present value only we call as decommissioning, restoration and other similar liabilities. These three are considered to be the cost of the PPE. Present value of cost of removal, restoration, which happens at the end of the life. These three are to be added, sir. These are the components of the cost. Whereas some costs which are not to be considered. Let us say after trial run is completed, I think the asset is ready for use. Am I right or not? Now we have done a lot of hard work. We have purchased, we have imported some machinery. We have installed it. Trial run is done. I think whenever a big machinery is imported, we want to communicate everybody. We are having great plant and machinery, good production will be there. We are a top company. Like that we want to communicate sometimes. So like that if you do grandly, some costs will be there called as inauguration costs. Hello, just like house is completed. Whenever house is completed, so inauguration will be done. Exactly in the same way, housewarming will be done. Exactly, if a plant and machinery you have purchased, everything is ready, then you may go for inauguration costs. Is it necessary for the asset to make it ready for use? No, already asset is ready for use. So this is not a cost of the PPE. Similarly, sir, first time we have bought a new plant and machinery. Now production will happen now itself. New products are getting manufactured. To bring more and more sales, I have to do marketing. Hello, I have to do what, sir? Marketing. Now marketing is required to get the asset ready for use. No. So once again, this is also not cost of PPE, not part of the cost. Similarly, first time we have brought a plant and machinery, sir, how to operate it. For employees, training may be required. Hello, what is that? Training to employees for manufacturing products using this plant and machinery. Training to employees. And sir, when we have taken a new plant and machinery, when products are manufactured newly, you may not have big demand, due to which in the first few years, you may have losses for 1 or 2 years. Now these losses, can I say, due to this asset only, I am having losses, so I will adjust to asset. Can you say like that? No, sir. So it is not required to get the asset ready for use. So if there are any initial operating losses, they are also not to be considered as cost of the PPE. Similarly, sometimes now you may need to shift from one location to another location. After some time, you may need to shift, sir, suddenly for different reason. Then for shifting, if there is any cost, this asset I am removing here, I am installing another place. For this, some costs I have incurred for this asset only. Can I say, shall I add it to the cost of the asset? No, because is it increasing the efficiency of the asset? No. Is it required for getting the asset ready for use? No. You are suddenly taking a new decision, shifting from one place to another. It is not required to get it ready for use at the first time. So thereby, this is also not cost of the PPE, that is cost of shifting from one location to another. One location to another. Sometimes you may incur some general administration overheads. Hello, what is that? General administration overheads, which you cannot link it to asset itself. Sir, if it is possible to link to asset, you can link it, sir. Sometimes we will incur for organization as a whole. Now you cannot say it should be added to the cost of the PPE, just like inventory. In AS2, what we will do, sir? If there are any general administration expenses, will be added to the cost? No. So these are some expenses which cannot be linked to any asset or any particular product. So never part of the cost. So these are the costs not to be considered. Sir, in the examination, they'll give list of the cost. They'll ask whether it is part of purchase price or whether it is part of directly attributable costs or whether it is decommissioning. Like that, under these 4 heads, they may ask you to classify, sir. That's why I'm giving you list clearly what are part of the cost, what are not part of the cost. In the cost also among these 3 heads. Hope everybody have understood initial recognition. That too for the first type. What is that, sir? Cash or credit. Now let me move to the second one. What is that, sir? Exchange of assets. Sir, for exchange of assets, I'll give you 3 principles. If you remember the 3 principles, you can easily answer any question, sir. First one, if in the case of exchange of asset, usually we record at which value means it is fair value of the asset given up or asset acquired, whichever is higher or lower. Whichever is higher or lower. Clearly evident. Generally we see the word whichever, we used to write higher or lower, but not here. It is whichever is clearly evident. Sir, we have to record at the fair value of the asset given up because we are giving one asset for getting another asset. Both are assets only. I want to get PPE, for that I am giving another PPE or another investment or any other asset I am having, stock, etc. For exchange of assets, I am giving investment, I am giving stock, but I am getting PPE. So in such a case, you have to take fair value of the asset given up or acquired, whichever is clearly evident. Suppose both are clearly evident. Sometimes both may be clearly evident, sir. Both fair values are clearly evident. Suppose both are clearly evident, then preference should be given to asset given up. Because ultimately, what we give is our cost. Suppose we are paying cash, that is our cost. If we are giving something, that is our cost. So, then prefer fair value of asset given up. If both are clearly evident. If both fair values are not known. Sometimes it is possible that both fair values are not known. Then what you will do, sir? Simply carrying amount of the asset given up. Because if I don't know fair value, at least I will know the book value, no? So simply I will take carrying amount of the asset given up. Sir, in the case of exchange of assets, we take fair value of the asset given up or fair value of the asset acquired, whichever is clearly evident. If both are clearly evident, fair value of the asset given up. If both fair values are not known, we will take carrying amount of the asset given up. All these principles holds good if asset has commercial substance. If asset has commercial substance. Now, What do you mean by this commercial substance, sir? Now, very simple, sir. Sir, using exchange of assets concept, many people have started doing some frauds. Hello? Using exchange of assets concept, many people have started doing some fraud. So, using exchange of assets, frauds can be done, huh? Yes, sir. Let me show you. Let us say A Limited is one company, B Limited is another company. Both are friendly companies. Let us say both have started companies at the same time. Both are having similar plant and machinery. Let us say plant and machinery of A Limited is 19 crores. Plant and machinery of B Limited book value is 20 crores. Let us assume the fair value is, let us assume, 24 crores. Sometimes what may happen is fair value of the asset may be higher if such assets are not being manufactured, if demand is higher. Let us say this is the scenario. Outside value is 24 crores, book value is 19 crores, for B Limited 20 crores. Now A Limited is trying to book some excessive profits. Can A Limited do anything? He want to show some higher profits in his P&L of the current year. Already losses are there, so he want to show to the shareholders that he is having higher profits. He want to do some fraud. Can he do any fraud? Now please understand. So you may think, sir, he can revalue. No, if he revalues, it goes to revaluation reserve, not in P&L. Hello. If he revalues, it moves to revaluation reserve. Suppose he exchanges this plant and machinery with B Limited because both are similar. Now what he will do, sir, he'll write an entry like this: plant and machinery 24 crores because he is acquiring at 24, to plant and machinery 9 crores, to P&L 5 crores. Like that, he may try to book some profit fraudulently. Here why I am telling fraudulently is because really, do you think this transaction will happen? No. In books only this will happen. A Limited will keep with A Limited only. B Limited will keep with B Limited. Who will come and check? Both are similar only. No. Who will understand whether transaction has happened or not? Like this, they may try to fraudulently book the profits. Sir, are you getting the point, sir? Standard don't want to allow this. What they are telling is, commercially, is there any substance here? Commercial substance means, really, is it a good transaction, good commercial transaction? Really, is it a business transaction getting entered? No, this is some dummy transaction, not at all genuine. So what they say is, if the transaction is like this, I will not allow you to book profit or loss. Further, they have brought a concept called commercial substance. If the asset is having commercial substance, then you can book profit or loss. If the asset is not having commercial substance, in this scenario we say asset is not having commercial substance. In this scenario, you cannot book the profit or loss. Now what the standard has brought principle is, if asset is not having commercial substance, then transfer has to be done at book carrying amount of the asset given up only. That means you cannot record this asset at 24. You have to record at carrying amount of the asset given up 19. As a result, can you book any profit or loss? No. That is the principle brought, sir. So what they have said, all the above principles holds good. That means you can record an asset at fair value when you can record if it is having commercial substance. If asset doesn't have commercial substance, you cannot recognize what, sir? Profit or loss. You can't recognize profit or loss. For that purpose, what principle was said? It has to be recorded at carrying amount of asset given up. If you recorded that value, you have to credit that amount, debit also same amount, then you cannot record any profit or loss. That is the intention behind that principle. Anyway, to give you simple way of understanding when we can say commercial substance is there and when we can say commercial substance is not there, I'll just give you 3 examples, sir. With the 3 examples, you can clearly understand when commercial substance is there and when it is not there. Sir, plant and machinery with a plant and machinery exchange is happening and both are similar plant and machineries. In such a case, commercial substance is not there. Commercial substance is not there. We are exchanging old plant and machinery with an advanced plant and machinery. Now tell me, I think there might be some necessity for which they are taking a new advanced plant and machinery. Now if they really exchange it, benefits will be there or not? Commercially something can happen or not? Yes, in this situation we feel that commercial substance is there. Another scenario, suppose I am exchanging plant and machinery with furniture. Now tell me, commercial substance will be there or not? Definitely yes. How you can say commercial substance is not there? Because you cannot show to anybody, I have exchanged plant and machinery with furniture, then furniture should be there with you. But you want to continue with plant and machinery. So thereby, so usually only in one scenario commercial substance is not there. If two similar assets are getting exchanged, then that might be a fraudulent transaction. We say commercial substance is not there. Then you cannot book profit or loss. You have to record it carrying amount of the asset given up. So hope everybody have understood. So with this exchange of assets also completed, sir. Sir, is that clear? Now let me move to the last one here, self-generated. Now what is this self-generated, sir? Very simple. Sometimes we may construct the assets, sir. All the principles we have said till now holds good. Only 3 points you should know, sir. One is internal profits should not be considered. Hello, what should not be considered? Internal profits. When you are manufacturing, you should not consider any internal profits. Second one, any abnormal losses should not be considered as the part of the cost. Sometimes any material loss may be there or some other abnormal loss might be there. You cannot treat it as part of the cost. It is a loss only, but not cost for the PPE, but it's a loss, abnormal loss to be recorded in the general P&L. Sir, are you getting the point? Similarly, sometimes interest may be incurred, sir, because we are constructing. In the course we may take some loan, sir. Interest may be there. Interest to be added if it is a qualifying asset as per AS 16. Because if you are constructing a building, sometimes what it may happen, sir? It may be a qualifying asset, then interest has to be added. Interest to be added if it is a qualifying. If you just remember these three, all other principles remains the same for self-generated. So internal profits to be eliminated, abnormal losses to be not considered, and interest to be added if it is a qualifying asset. That's all. With this we have completed initial recognition. Sir, discussion clear? Now let me move to the next one. What is that, sir? Subsequent recognition. Now let me tell you, subsequent recognition can be done in two ways, sir. Two models are there for that. One is cost model. The other one is revaluation model. Subsequent recognition means at the year end, sir. At the year end, at what value you should record the asset. For the two models are there. One is cost model, the other one is revaluation model. Under cost model, how do we present, sir? It is original cost less accumulated depreciation. Hello, what is that, sir? Original cost less accumulated depreciation less impairment loss, if any. Sometimes impairment loss will be there. Then we will get what's the cost. Then under revaluation, what we will do, sir? It is fair value less subsequent accumulated depreciation less subsequent impairment loss gives you carrying amount of the PPE. Here in this way carrying amount will be computed. Here in this way carrying amount will be computed. Two models are there. One is cost model. The other one is revaluation model. Cost model means original cost less accumulated depreciation less impairment loss. Revaluation model means fair value less subsequent accumulated depreciation less subsequent impairment loss. Now you may get a doubt why we are using the word called subsequent. Now let me tell you, sir, when we compare cost and fair value, sir, when we compare carrying amount and fair value every year, no. Whenever we feel substantial difference is there between book value and fair value, then we will go for revaluation. So what I say is, at that time you might have recorded some fair value. After that date, any accumulated depreciation. After that date, any impairment loss to be reduced to find today's carrying amount. Because fair value not done regularly, it may be done on any particular date. From on that day, what is the fair value? From that date onwards, what is the accumulated depreciation? What is the impairment loss? If we reduce it, we will get the values. This is the model of writing, sir, but this is not important for examination. What is important is how you will do revaluation. Whenever there is revaluation, what is the accounting treatment for it? Sir, are you getting the point? Usually we maintain in this way, sir. Original cost less accumulated depreciation gives you the carrying amount. This is what the normal method, sir. Let us take some values. Let us say original cost of an asset is 1000, accumulated depreciation is 400, carrying amount will be 600. Now what we thought is this asset is to be revalued to 1500. Hello, what is that? This asset should be revalued to 1500. 600 worth asset should be revalued to 1500. Now how the entry will happen? What is the accounting treatment? So tell me one thing. Have you already charged depreciation to asset account? No. It is maintained in accumulated depreciation. Now if you want to increase this to 1500, what is being increased, sir? WDV. It's not original cost. What is being increased? WDV. So to make this possible, first bring the asset to WDV, then make the revaluation. How to bring the asset to WDV? Provide that accumulated depreciation now. Adjust it. That means how to adjust, sir? Accumulated depreciation to fixed asset. How much, sir? 400. If we provide, now today asset value will become how much, sir? 600. Once that has become 600, how much increase was there? 900. So we'll simply write fixed asset account at R2, revaluation reserve 900. Sir, are you getting the point? In this way we will account. This is one approach. But the problem in this approach is, in the balance sheet, how do we present, sir? Suppose once I have done revaluation, how do I present? Can I continue showing this is the original cost, this is the accumulated depreciation? Can I continue showing? No, because already I have adjusted accumulated depreciation. Directly I have to show WDV. Actually, the purpose of showing this is, we want to communicate to the users, this is the total cost. This is the usage already done. This much asset portion can still be used. Like that we want to communicate, sir. 40% of the asset is used, still 60% can be used. Like that we want to communicate, but if we apply this method, we cannot communicate like that, because entire accumulated depreciation is getting cancelled. So there is yet another method. In fact, this method is only followed. Now what is that method? To understand that method, we should know the impact, sir. Let me show you. This is before revaluation. Hello, what, sir? Before revaluation. Now something I will write after revaluation. Then I will write due to revaluation. Three things I will write. One is before revaluation, the other one is due to revaluation, the other one is after revaluation. Now we know one thing. After revaluation, carrying amount should be how much, sir? 1500. Accepted or not? After revaluation, carrying amount should be how much? 1500. Can you tell me how much increase was there? Hello, how much increase was there? 900. How much percentage increase was there? Increase was there. How much, sir? Increase is 900. Increase is 900. Percentage is 150%. Accepted? It is 150% of 600. On 600, how much percent increase was there? 150. Now standard says go and apply the same percentage for accumulated depreciation as well as original cost. What is 150% of 1000? 1500. What is 150% of 400? 600. Now you please add it to the existing original cost. As a result, new original cost will be 2500, new accumulated depreciation will be 1000, new carrying amount will be 1500. In this way they have derived another method. Now here what we will do, due to revaluation, whatever is happening, that only we are going to record. In this method, entry will be, asset will still continue at original cost or not? Yes. That's why we have to increase the asset. How much, sir? You could observe 1500. Fixed asset account at R 1500. To accumulated depreciation I should increase. How much, sir? 600. To increase we will transfer to revaluation reserve 900. This is what? Another method, sir. under this method, what we are able to achieve, still we can continue to show under this approach where we can show original cost, where we can show accumulated depreciation, where we can show net amount. So we can show to the users that still this is the total, 40% usage was done, still 60% usage is pending. Like that we can communicate. Like that totally how many methods are there, sir? 2 methods are there. In the first method, we eliminate entire accumulate depreciation against fixed asset, then we will revalue. In the second method, we will increase original cost, we will increase accumulate depreciation proportionately in the proportion of increase in carrying amount. Whatever increase was there in carrying amount 900, for the same proportion we'll increase the original cost, we'll increase the accumulated depreciation. In that way we'll get the new values of the original cost and accumulated depreciation. So for that we'll pass the entry. Because we are increasing the asset by 1500, we'll debit fixed asset 1500. Because we are increasing accumulated depreciation by 600, we'll credit 600. Revaluation reserve balance 900. In this way revaluation will happen. Sir, this is important concept. They have not tested till now. I feel maybe in one of the coming attempts based on this question they will be asking. Example is there in study material, but illustration was not there. They are not asking that this question, but concept is important, sir. Probability is there that one of the coming attempts they may ask this question. That's why I am discussing. Till now they have not asked, sir, but possibility is there. They can ask you to give the impact of revaluation under any of these methods. Sir, can I proceed? Sir, understood? I know I am discussing quickly, sir, but still required, sir. Within 1 hour, AS10 means AS10 takes 10 hours. So it's not 1 hour topic. So thereby, let us proceed, sir. With this revaluation main point is completed. Let me tell you one point. Sir, I am having 5 assets. Now, can I follow for 2 assets cost model, for 3 assets revaluation model? Is that allowed? Can I follow like that? Point is very simple. Standard has never said you should follow for everything cost or for everything revaluation. But for same class of asset, follow the same model. In other words, usually in income tax, you'll get block of assets. Hello? There only you'll get class of assets also, sir. Similar. That means for all plant and machineries, follow one thing, sir. For all buildings, follow one thing, either cost or revaluation. Similarly, for all vehicles, you follow one. But follow the same for that particular class. Sometimes you may feel that all buildings are of same class. Don't feel like that, sir. Sometimes due to nature, within buildings alone, you may have different classes. Let us say office buildings and factory buildings. Hello, what is that? Office building and factory building. Sir, factory building means every day production will happen subjected to greater usage and damage. Whereas office building means it's like a head office, no big activities happens, it usually used less. Are you getting the point, sir? The nature of both the buildings are different, the purpose are different, so hence we feel as different class. Discussion clear? So thereby for each class same model. Sometimes within the asset itself you may have 2 or more models. So please be careful. For each class you can follow same. That means for these two, can I follow same? Should I follow same model? No, not required. Both are different class. That is what the conclusion with respect to subsequent recognition. Sir, hope you have understood. Now let me move to the last important topic, depreciation. Let me quickly discuss depreciation within 8 minutes and then we'll solve few problems, sir. AS10 only. Depreciation, sir. Let me give you the important aspects of depreciation. First, you should know when the depreciation will be commenced. In other words, when you should start providing depreciation. When you will start providing depreciation, sir? When the asset is put to user or when the asset is ready for user? Hello? Put to use or ready for use? It is not put to use, sir, because you might have heard something depreciation for wear and tear also. Hello, what is the depreciation for wear and tear? Now, even if you not use it, wear and tear will happen. So thereby, when it is ready for use only, depreciation will start. When we should stop providing depreciation, sir? When it is held for sale. Usually when it is held for sale, depreciation will be stopped, or another possibility might be if residual value is greater than carrying amount. Sir, sometimes residual value might be higher, sir. You may have higher sale value at the end. Then what is the need of providing depreciation? For land, why we will not provide depreciation, sir? Every day land value will increase. So we feel that final sale value will increase rather than today's book value. That's why we say land is a non-depreciable asset. Same logic, sir. If your residual value is greater than carrying amount, for what value you will depreciate? So thereby depreciation should be stopped even if residual value is higher than carrying amount. That is what cessation, sir. Then what is the method of depreciation that you should follow? Which method you should follow, sir? Three methods are there. Either of the three methods you can follow. It is SLM, WDV or production units method. Now based on usage only we have to pick the method. Based on what, sir? Usage. I can say if the usage is consistent, we'll follow SLM. If the usage is declining, we'll follow WDV. If the usage has no trend at all, then we follow production units method. Continuous decline, WDV. No, sir, every year equal, SLM. No trend at all. Simply based on number of units produced, you follow the depreciation pattern. This is what? Method of depreciation. Now, after method, the important point, one important point will be whenever there is change in, sir, useful life or residual value. Sometimes there may be a change in method of depreciation also. How you should account for, sir? Let me tell you one thing. Previously, method of depreciation, they used to account on a retrospective long back, sir. Now because of the amendments, there is no big difference whether it is method of depreciation or change in useful life or anything. Any change in the value of asset, any change to be accounted on prospective basis only. Which basis, sir? Prospective. Whatever the change might be, everything we will account for only on a prospective basis. So that is what? Change in useful life or residual value. Then some special points, sir. I'm just giving those points which can be asked in examination, sir. If something cannot be asked, I'm not giving. What are the special points? Sir, if an asset have significant components, then component wise depreciation is to be provided. Hello, what is that, sir? Component wise depreciation. Sir, you might have heard, sir, some concept called component wise accounting. Generally, if an asset is having some significant different components, then for different components separately depreciation to be provided. Let me give a big example, sir, simple example. Let us say you have purchased a refrigerator. Hello, what is that, sir? Refrigerator. Now usually in refrigerator what will be there, sir? Whenever you purchase, they will be giving you some warranty. How many years they will give warranty? I think you might have heard like this. For compressor, hello, this many years. For other body parts, this many years. Have you heard like that? Similarly, anything, sir, any washing machine or anything, whatever you purchase, for motor, they'll say this many years. For other body parts, they'll say other different years. Am I right or not? This will happen because usually the compressor or the motors, these are, or engines, these are built with some good quality, sir. That is the main part. Now I can say in a refrigerator, now compressor and other body parts are two significant aspects. Now usually compressor may have a life of 10 to 12 years, sir. But other body parts may have a life of generally 5 years to 6 years, sir. But what we do? Let us say out of 20,000 refrigerator, now usually what we do, sir, let us say compressor is 12,000 or 14,000, body parts is 6,000. To be frankly speaking, if they are having different useful life, depreciation also to be provided separately. But Previously, what we used to do is, for entire 20,000, we consider some average, maybe 7 years or 8 years. For that 8 years only, we used to provide depreciation. Now, standard has started telling that if you feel within the asset, different components are there, significant components are there with a different useful life. Hello, with a different useful life, then, or different nature, then provide depreciation separately. Accounting also will be done separately. Entry will be recorded like this, sir. Refrigerator in that compressor. Similarly, refrigerator in that body parts. To bank. In that way we will record. Subdivision will be there. 14,000 and 6,000. Depreciation also will be provided on this separately, each of them. So here what is happening, sir? Component wise we are providing depreciation. This is a separate concept called component wise accounting or component wise depreciation. This is one important aspect in depreciation. Sir, is that clear, everybody? Now, so these are the important points, sir. Now let me stop here. If we continue discussing more and more aspects, but these aspects are sufficient. Most of the problems given in study material, you will be able to solve it, sir. I can say one simple aspect, subsequent expenditure. What is that, sir? Subsequent expenditure. If it increases the FEB, future economic benefits, we have to add it, sir. If it is to just retain the benefits, we have to ignore it. So this is what subsequent expenditure. Maybe in your lower levels you will learn like this. If it increases efficiency, we will add. If it doesn't increase efficiency, we will not add. The day-to-day repairs, etc., we will not add. But major part replacement, which will increase the efficiency, has to be added to the cost. So these are some important aspects. Sir, have you all understood till now? So let me take up few questions, sir. At least 6 or 7 questions, good questions, and we will solve it. So that we will complete this AS7. Sir, in the case of standards, discussion will take more time. Questions will be done very quickly. Now you will see it. We will take some CRDs and I will solve it, sir. Now, look here carefully. Usually more questions are asked on initial recognition, sir, that cost. Now, cost of the plant, this will be part of the cost or not? Yes. Initial delivery and handling costs? Yes. Site preparation costs? Yes. Consultants used for advice on the acquisition? Yes. Interest charges paid? Usually interest is not a part of the cost unless it is a qualifying asset. So this will not be part. Estimated dismantling cost to be incurred after 7 years. This is decommissioning restoration. Yes. Operating losses before commercial production. No. Initial operating losses is not a part. That's all. If you add these elements, it is the cost of PPE. Over. Sir, clear? Let me move to the second question. Srishti Limited contracted with a supplier to purchase machinery which is to be installed in Department A in 3 months' time. Special foundations were required for the machinery which were to be prepared within this supply lead time. The cost of the site preparation and laying foundations 1,41,870. Will we consider or not? Yes. Site preparation costs. These activities were supervised by a technician who is employed for this purpose for 45,000 per month. Technician services were given by Department B to A, which billed at 49,500 by adding 10% profit. 45,000 plus 10%, 4,500. Will we consider any internal profits? No. Internal profits has to be eliminated. So only 45,000 to be considered. This is per month. How many months, sir? 3 months. I think 3 months, sir. So thereby into 3, you will get the amount to be considered. Next, the machinery was purchased at 1,58,34,000 inclusive of IGST at the rate of 12%, for which input credit is available. So shall we consider the IGST? No. This amount is 100 or 112? 112. So we divide by 112 into 100 gives you the cost to be considered. 55,770 transportation charges. Will we consider or not? Yes. An architect was appointed at a fee of 30,000 to supervise the machinery. Will we consider or not? Yes. So these are the costs, sir. Technician salary, delivery, architect's fees. Now here divide by 112 into 100. Site preparation cost 45,000 into 3. That's all. Question number 2 also completed. Question number 3, not so important, not regularly asked, sir. So let me proceed to 4. entity A has an existing freehold property which it intends to knock down and redevelop. During the redevelopment period, the company will move its production facilities to another site. So what is this, sir? Shifting from one place to another. When you are shifting from one place to another, for that whatever cost you incur, removing and incorporating another, rent, removing, all this will be considered? No. So cost of shifting will not be considered. So I will say, sir, these costs are not to be included because they are not directly attributable to bringing the asset for ready for use. These are in the nature of cost of relocating or reorganization. So they do not meet the cost of PPE. Next, an amusement park has a soft opening to the public to trial run its attractions. Tickets are sold at 50% during this period and the operating capacity is 80%. Official opening day of the amusement park is 3 months later. Management claimed that this soft opening is a trial run necessary for the amusement park to be in the condition capable of operating in the intended manner. Accordingly, they want to add it to the cost of the asset. Very simple, sir. There is an amusement park. They are selling tickets at a lower prices. What they say is, if I sell like this, some people will come so that I can do a trial run. This is what management is claiming. Do you think it is trial run? Is it trial run? Trial run means, should they call outsiders? Their employees only can do it. No. Hello. It's an amusement park. Now, should they call any outsiders, sir? No. Nothing required. They can do on their own. Already amusement park is ready. In the first few months, you have to give lower prices only, sir. That we can say as initial operating losses. These are some initial operating losses. You cannot charge higher prices. Are you getting the point? For that reason, he is claiming that trial run. How you can say trial run? Trial run means do it with your employees. Hello? You cannot do with outsiders. Suppose something happened to them. What you will do, sir? Hello? Now you will say trial run cost. Like that, will you give some compensation? No, sir. Once like this happened in Queensland, sir, Chennai. Some from Titanic or something, 10 or 20 people fell down. That Queensland itself is stopped. Exhibition. Because I am talking about the amusement park, I am telling, sir. From the Titanic, now we will just move like this, no wave. So from there, 20 people fell down. Okay, right. Almost from a height of 10 feet or how much? Something. 10 or 20. Okay, right. Let me continue. Let us not go to Queensland. Let us be there here only. Now look here carefully, sir. Question number 6. Sir, hope you have understood this. This should not be capitalized. They are like something called as operating losses. Okay, right. Next. Now look here carefully, sir. 6 and 7. Entity A exchanges land with a book value of 10 lakh for cash of 20 and plant and machinery valued at 25. They are giving what, sir? Land. They are getting what, sir? Cash and plant and machinery. Sir, are you getting the point? Now tell me, first of all, commercial substance is there or not? One is land, the other one is plant and machinery. Definitely commercial substance will be there. But for your easiness, we have only given in brackets, sir, but in exam they may not give. Hello? This is not their study material. For your easiness, we have given. Okay, right. Now, I think you can analyze whether it is having commercial substance or not. Now, the point is, when it is having commercial substance, you can record at the fair value only. Now, what is the entry? You are giving what, sir? Land. Now, entry will be a cash account. I'll just write here, sir. You are receiving what, sir? Cash, 20 lakhs. Plant and machinery, 25 lakhs. To land, how much, sir? 10 lakhs is the book value. Entire balance, 35 lakhs, you can transfer to P&L. That means because asset is having commercial substance, you can book the profit or loss. Sir, have you all understood, sir? So that is the entry. Since transaction is having commercial substance, plant and machinery will be recorded 25 lakhs. How do you get 25? They are telling like this. 45 minus 20 is 25. How do we get this 45 only in this way, sir? Okay, they're bad computations. Leave it, sir. But anyway, plant and machinery has to be recorded 25. You can recognize a profit or loss of 35 lakhs. Next, question number 7. Entity A exchanges car X with book value of 13 lakhs and fair value of 13 lakh 25 for cash of 15,000 and car Y, which has a fair value of 13 lakh 10. Commercial substance there or not there? Not there, because both are cars and both are having similar fair value, which tells that both are similar. And they are also telling, they are only giving in the question for your clarity. Transaction lacks commercial substance as the company's cash flows are not expected to change as a result of exchange. It is in the same position as it was before the transaction. It might be for doing the fraud. Now, can you book the profit or loss? No. Because sometimes they may try to book profits, sir. Sometimes they may try to intentionally book losses. Both are not allowed. Simply you have to record it, carrying amount of the asset given up. So neither profit nor loss. Can you tell me entry for this? What you are giving? What you are giving? Car X. What you are getting? Cash of 15,000. Car Y of 13 lakh 10,000. Sir, please remember, you are getting cash. You are getting car Y. For that you are giving car X. Now tell me, I have to record these two together at which value? Together at carrying amount of the X. Then only I don't get any profit or loss. What is the carrying amount of the asset? 13 lakhs. So thereby here 13 lakhs. They have said cash 15,000. This should be the balance. Then only I don't get any profit or loss. That's why I have to record at 12 lakh 85. Let me read it, sir. The entity recognizes the assets received at the book value of the car X. Therefore, it recognizes cash of 15 and PPE of 12 lakh 85,000. So, hope everybody have understood. Now, this is a revaluation model, sir, where we have applied two methods. Similar will be there, sir. Let me take this question, regularly asked in the exam. Now you could observe, in the year 2016-17, entity has acquired a new freehold building with a useful life of 50 years. Entity decide to calculate depreciation charge per annum using a straight line method. It has identified the following components. Now this is what, sir? Component wise depreciation. Because within this freehold building, you are having land, you are having roof, you are having lifts, you are having fixtures, you are having balance building. Everything is having different lives. Based on that only you should provide depreciation. For land, nil. For roof, 10 lakhs divided by 25. For lift, 5 lakh divided by 20. For fixtures, 5 lakh by 10. Here 50 lakh by 50. In that way, we have to separately compute the depreciation. So hope it is clear. So that is what separate depreciation, sir. That's all, sir. So some of the important aspects we have covered. Okay. So with this, we are closing